Hello everyone, I'm Tian Tu. I'm investing in the last 5 years and achieved the result of 17% in investing in the active assets. I think it is the key of my result of my gain in the market because I choose carefully the active assets to buy and to assure the gain in the future. So today I would like to share with you my ideas on the active assets that I'm looking at the moment and things I would like to buy. So in the last video, I share with you what is the difference between active and passive assets. It's very important to understand this. So if you want to come back to this video, please come back and watch the introduction. Today, I will share a topic more advanced in which active assets I'm looking for at the moment. So to have the context, the active assets is the assets that produce earning every year. For example, Microsoft produce earning every year. The earning is a profit the company gets at the end of the year. So Microsoft produce earning. They can, once they receive the profit, they can redistribute this profit to the investors. In this case, you receive the dividends. If Microsoft want to reinvest this profit in the company so that Microsoft can gain more in the next year, in this case, Microsoft, the price of the stock will increase because next year you have more earning, so the stock price have more value. But there is a trick because some companies, not all the company are active assets. Some company are active assets, some other company are passive assets. And I will explain it to you when I share with you the active assets I'm looking for at the moment. So let's come back to our main subject, right? There are two assets that I'm looking for at the moment, and I think it is good time to buy. The first active asset are the company stocks. Of course, I'll just share with you. There are many companies in the stock market are at the reasonable price or at the bargain price right now. For example, Microsoft, Google, Apple, Amazon, Facebook, Adobe. Well, they are the active assets because they produce a significant earning for you. When you buy the active assets, it's not really important to buy it at the bargain price because, you just need to buy the stocks at a reasonable price and assure that you do not pay too expensive for these stocks, because anyway the stock will produce earning every year. So if you buy now or you wait 1 month to pay 5% less expensive, it's not really important. But the thing is important to understand right now is that in the stock market, there are many other companies as active assets, but the price are very high. And if you buy these assets, it's similar to buying a passive asset. Why? Because you expecting that the stock price will increase in the future. However, because the company cannot assure the growth in the next few years. One example is Nvidia. I think Nvidia is a very good company. They are the active assets, but the earning they produce is too small compared to the stock price. So if you buy Nvidia right now, it's like you're paying for the passive assets. Now the Nvidia is all-time high. Maybe you do not believe me that the price of Nvidia can reduce. But take a look at Tesla. 2 years ago, Tesla was a very, very good company, and we are all crazy about the electric cars. we think that electric car will be the future, but look at the price of the Nvidia. It go down from 2022 to 2023, and the price dropped so much, more than 50%. From 23 to 24, the market recovers, but the price of Tesla just go up a little bit, and now it start to drop again. So the problem when you pay for the passive assets is that as you pay a too high price, and so surely the market, the stock market will come down and the stock price will go down. But when the stock market recover, the passive assets you're holding, it just go up a little bit, but you cannot recover to the price it was before. So it is the stock market. We still have many good active assets in the stock market right now. The second asset I would like to share with you is real estate. You know, last year, after the COVID, the real estate go up so much, but it started to calm down last year. For example, now, if you look at the apartment or house price in Paris or other cities in France, we see that the price dropped already 5 to 10% in the last compared to the price 4 years ago. So for some apartment right now, in some city, you pay for the price before the COVID. So the increase in the COVID was wiped out, and now you are paying for the real estate price with the same price before the COVID, which is amazing. Well, the real estate is a very good active asset because you can rent your house, your apartment, and it produces a real earning. And you can also stay in the apartment and to reduce your rent. The real estate can reduce more. I don't know. Maybe it can drop 5% more. Maybe it's already the bottom. I don't know, right? But as long as you pay for the price cheaper than 4 years before, and it's already dropped 10%, it's okay. It's okay. Yeah. So for the conclusion, the active assets are everywhere and every time. Now, even in the bull market, we can still find the active assets in the stock market and in real estate. And I think investing in the active assets is a very good way to assure the gain in the future and reduce a lot of headache for you. Thank you, and in the next video I will share with you the third active assets, which is a very efficient one, and I think I need a whole video to talk about it. Yeah, see you in the next video. Bye bye.